I'm going to talk to you about what the current view of international investors and international banks are vis-a-vis Ukraine and the economy. And that's very, very important because, as you know, the financial system is the key driver of economic growth in the country. And we can say that the financial system is currently in a fairly bad state for a lot of different reasons. So what we'd like to do today with you is to talk about where we are now and where we're going. And the way I would define this is currently we're in the middle. And both international banks and, for that matter, the majority of local banks that are still operating, as well as foreign investors, are still in a wait-and-see period. So we're going to talk about why we are still in a wait-and-see period and what should we expect next. What do we need to see next to move forward? So what I'll do is first we'll talk about this. Where are we now? You know, I don't like to start with bad news, but I do want to talk about where we are now so we can understand where we want to go. So the first graph you will see is that GDP growth. The economy is obviously not in very good shape. Last year it dropped about 7%. This year the forecasts are for another drop between 5 to 7%. So clearly, from an international financial point of view, as well as from international investor point of view, there's been a lot of economic destruction. And this is not just because of Donbass and Crimea, this is just the general state of the economy. And this year, the economic forecast is again about -7%. That's a very, very tough base to start with, where you have a recession of -7% for 2 years. The forecast for next year, we're starting to talk about a recovery, and I'll talk about why we think this recovery can formalize, is maybe 0 to 2% growth. It depends on what economist you talk to. Economists every month change their forecast, but we are projecting that this recession will end starting next year. So what kind of factors do we need to ensure that this recession will indeed end? What I'd also like to point out is another key fact that investors are looking at is due to the drop of the hryvnia as well as the increase in debt. It's very clear to see that the amount of debt to the GDP of the country has grown from 40% to almost 100%. That's a very, very negative indicator, another problem that we're facing right now. So when you sum it up, there's a few other things I can point to. This is another slide that everyone talks about. This is a serious slide. This is another indication of the health of the Ukrainian economy and the finances of the country, the foreign exchange reserves. And they have gone down constantly for the last 3 years. And only last month, when the IMF package was approved, our foreign exchange reserves actually starting to go up. You'll see it went up from $5.5 billion, now it's $9.9 billion. The central bank does project, they hope to have foreign exchange reserves at $17 billion by the end of the year. So clearly this negative trend has been stopped and it's now being reversed. So now let's talk about, I'm not going to talk about more problems. We have a lot of problems. We have a drop in consumer disposable income. We still have a lot of reforms that need to be done. I'm not going to talk about all the problems. I just want you to know we're starting off in a fairly difficult situation. And what that means is that there's very little lending right now. Everyone is waiting to see. And there's almost zero foreign direct investment. So what does this country need? It needs lending to get the economy going, and it needs foreign investment again. So let's talk about what's happening to get these two things back to Ukraine. First, 3 key stabilization factors. We talked about the problems already. Let's talk about the 3 key stabilization factors the country is working on, and then we can visualize a recovery next year. Stabilization factor number 1, and they're all money related, is the IMF package. The IMF package, the extended financing facility of $17.5 billion, was approved last month. The first disbursement of $5 billion was given to Ukraine last month, which is why you see this sort of pickup. So the IMF package is stabilization factor number one. It's the glue for everything. Without this, the country would basically be bankrupt already. Stabilization factor number two, which is linked to the IMF package, is the current restructuring of the sovereign debt situation of the country, led by Minister Jaresko of the Ministry of Finance. The government needs to restructure $15.3 billion of private creditor debt. These negotiations are now underway. They are very tough. They are based on three factors. The first is the private creditors need to reduce the coupon, the interest rate of all of the sovereign debt. The second factor is the private creditors have been asked to extend the tenor of the debt, so several additional years. It could be 10 years. In some countries, it's actually been 30 years. I don't think it'll be 30 years for Ukraine, but there will be an extension. And the third factor, and this is the most controversial, is the haircut. Haircut means the government of Ukraine is asking private creditors to actually forgive a part of the debt, and instead of receiving 100% of the bond value, perhaps agreeing to receive only 90 or 85% or some lower percent of the bond value. This haircut is the most painful request the government of Ukraine is asking of these private creditors. The message is that basically we don't just have a liquidity problem in the country, we have a solvency problem. We have too much debt. So we need to see how these negotiations proceed, but they are very critical. Now, Minister Jaresko has said that the target to complete the sovereign debt negotiations is the end of May. If she achieves this, then in Washington in the middle of June, the IMF will have another board meeting and they will give the second big disbursement under this program. So you can see that the sovereign debt restructuring exercise and the IMF package are interlinked. Without the second, there's going to be trouble with the first. These are critical. And every foreign investor, every banker is looking at this because right now, technically, the government of Ukraine is in default because they are negotiating the restructuring of the debt. The country is rated CC. That is a very, very low rating. So now you could see why the sovereign debt restructuring and the continuation of the IMF program is so critical to move us forward. What is the third key stabilization event? We talked about the IMF package. We talked about the sovereign debt restructuring. The third key element is the continuation of the reforms stipulated by the IMF. And there's a lot of benchmarks. The IMF program, every quarter, has certain tests and parameters and benchmarks the Ukrainian government must follow. It must achieve. So it's not just a matter of money. But money is very important. I'm talking about $40 billion of money. That is very important. But equally important is the continuation of the reform program. Reforms on anti-corruption, reforms of the judicial system, reforms of the energy sector, further reforms on the national budget. These reforms are very critical. Some of them have been delayed for many years, but they have been identified as key to the future success of the country. So without the continuation of reforms, and the country is doing well, the country is moving on these reforms. We believe that these reforms are serious and there is progress, but the job is not done. And until the job is done, the money will not all come, and future money will not come, and foreign investment will not come. So basically, when you look at this, the third key stabilization event, which is, as you see, tied to the IMF program again, is the continuation of reforms and concrete progress. We're in between. So basically what I would like to say is I started off by telling you that the current situation is still very, very difficult. But the path is positive, the progress is positive, the direction is clear, and everyone sees that. But until the second key stabilization event is completed, which is the sovereign debt restructuring, which I believe by the middle of June will be completed. Until this happens, we are still going to be more or less with a double C rating in the country, sitting on the sidelines and waiting. But we need to make progress on these three stabilization events in order to bring back FDI, to bring back lending, to lower interest rates, to ensure a longer-term stability of the currency, and most important, to have the foundation for recovery next year. There can be no recovery next year until the three key stabilization events are firmly entrenched in the system, with the government, with the economy. So just summarizing then, what do we need to get money coming back, new investment in the country? I can cite a few things. One is confidence. These three stabilization events provide confidence, they provide proof. Second, the debt restructuring, I talked about that. That's the next 2 months. Third, I didn't talk about this. It's the wild card. The wild card is the Donbass situation and the Russian issue. This could cause lots and lots of trouble. We all know that the ceasefire is very shaky. We all know that we're asking what could happen next. Is there going to be attack on Mariupol, or are there going to be other troubles? But this third issue, the issue with Russia, is the wild card because we don't control it, but it can cause a lot of trouble. It can damage the benefits of and the required needs of the three stabilization events. It's all linked to consumer confidence. I mean, not consumer confidence as well, but international investor confidence. We need the three stabilization events to succeed, and we don't need trouble in the East, because that can actually negate a lot of the progress. The fourth is the reforms. We talked about that. And the fifth is the IMF is not giving money without conditions. The continuation of the program is based on serious benchmarks, and they're being tested every quarter. So this is very serious. The government knows that. The IMF is working very closely with them. But we need all five of these things to get the money coming back, to get the recovery really started. So I don't know if I've spent 10 minutes already. I bet you I have. I will then end my talk. We'll have a question and answer period. There's a lot more stuff to talk about here. You can get this presentation so you can get lots of data about what we're looking at. But I've used this presentation in Washington to explain to the US government what we need to see to get back into health in the country. And I think it's a consistent message, so I'm happy to answer questions later on. Thank you very much.